Hello everyone, this is TGB Forex Academy. So today we are going to continue from where we stopped. So if you are just joining us today for the first time, I would recommend that you go and check out the other two videos where we did introduction on these lessons. So basically what we'll be learning how to do is how to avoid blowing up your account and ensuring that you make three at least 100% of a portfolio within a year. Yes, I'm not saying within a day, I'm not stretching out within 2 days or within a month. Yes, there are some strategy that you can use and your account to blow up in a day. But I'm not teaching that because I want you guys to understand that consistency is what can enable you to start from $100 and you get to $1,000 in a few years time, or you get to 1 million in a few years time. It's all about consistency. It's all about consistency. You can feel okay. Oh, with my $100 I can trade one or two pairs and I will make so much money for it in a few days. Yes, it's very true. That is achievable, but you can also use the same pattern that you use in getting using $100 after you've made it to maybe $500. You can also use that same technique and you blow up your account. So I'm all about consistency, building the account, growing it from a low level to where you want it to be. That is what I'm all about. Ensure that you don't blow up your account. You don't have to refund. You look for money to come and fund your account. So if you are a newbie, this is for you. If you are an intermediate trader, this is for you. I want to explain some basic rules and some basic concepts that you need to know about Forex. So now let's quickly jump onto it. So what you need to be successful, number one is for you to find a currency pair or an index that works for you. So look for something that works for you. Now, some people they like trading gold, some people they like scalping volatility, they like scalping some index on derive and all that. Some people they like they focus more on currency pairs. Now, what I will recommend if you are going for something that doesn't have to deal with um, um, fund too many analysis, especially when it comes to fundamental analysis, go with something that has to do with index. Index. For now, I avoid trading commodities and and US dollars dollar pairs. I avoid those currencies. I avoid those trades because I want to be sure of my analysis. I don't want something else to affect it. So yes, some people have been able to master those techniques. They need to master news, how news affect the current the pair they are working with, and how they want to work, how they intend to trade, either go on a sell or go on a buy. But I don't do that. So I will just basically teach what I have been studying for years, and I will explain it to you how you also can use it and you can start making money for it. So quickly, this is our lesson note. So if you have a pen or you have a notepad, kindly jot it down. So the first thing you need to know, I've said it before, you have to have a currency pair that works for you. That's the first thing you need to know. Then, since we will be focused more on fundamental analysis using indicators, and like I said yesterday, when you are working with a currency pair, when you are working with a with indexes, one thing you should know, one thing I want you guys to know is that you should avoid using too many indicators. Yes, sometimes it works. Sometimes when there's a confluence of of indicators, all of them giving you a particular signal, telling you okay, it's time for you to go low or go high, or it's time for you to buy or sell. It helps. It helps. But sometimes it makes it very confusing and you might end up losing an entry point because there are too many indicators you are focused on. So I would advise you work with at least two to three indicators. That way you will not be too overbogged with the with the indicator with the technical analysis. So that is what I would recommend. So As you can see from my chart here, I have two indicators, two moving averages. The blue one, the 50 MA and the 6 MA. These are the two indicators I use. I don't use any other indicators. Then I work with um, uh, um, uh, test, break and retest strategy. So after I've confirmed my trend, if it's going left up or if it's going down, I would now use a break and retest to be extra sure before I can get an exit. And I'm going to explain everything about my strategy in the next coming days. But I want you guys to understand how to use all these things that we have talked about so that you can start making money from it. Okay, so the next thing we have to I've talked about using technical analysis, simple technical analysis. Then you have to, very important, this is one of the most important, you have to be able to understand risk to reward ratio. Your risk to reward ratio, you have to be able to understand. It is very, very important that you understand. So I strongly recommend, like you can see, losing 1% of your account per trade. Losing 1% of your account per trade, and also losing 10% while also gaining 10% per day. So what this means is, if you have a $100 account, you should only trade, you should only risk $1 from that $100 account. If you have uh, a $200 account, you are only allowed, you are only permitted to risk just $2 per trade in that, for that account. If you have a $1,000 account, you're only allowed to lose $10 per trade on that account. That is one thing I'm going to recommend. Strongly recommend. So there's the profit ratio of at least 1:2, meaning you are losing $1, but you are gaining at least $2. So it depends on the setup and it depends on what I want. Like me, my lowest is $2, but I can do as much as 4, as much as 5. Depends on my setup. I'm going to explain my setup when I talk about the 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 indicators and how to work with my strategy. So just stay tuned, stay glued. This is TGB. I got you, and I'm going to teach you everything. Your $100 is not possible for you to lose it. Let me give you an advantage of this risk to reward ratio. Now, when you are losing 1% of your account per trade, that means you have at least 100 trades to make before you can blow up your account. 100 trades to make. 100 trades to make. And from my recommendations, you can see that there's 10% per week loss, meaning that you have, in a week, in a week, in a month we have 4 weeks. Meaning you can only lose 4 if maybe the market was so bad. Like I always say, forex trading is unpredictable. It's basically, what we basically do is using analysis or using ideas or using a structure that we have seen before, or using a, a pattern to predict the market flow, to predict the market direction of the market, if it's going to go up or it's going to go down. So there is a possibility that you must lose a trade. It is very important. There is no 100% strategy. There is always a possibility that you are going to lose a trade. So if you have this at the back of your mind, know that you must lose a trade, then that is when your mindset will begin to change. So before I learned about the strategy, once I lose maybe a certain amount of my trade, emotions start setting in. I start trading. Maybe I lose $4. I want to trade $8. I want, so that I can quickly recover. Then maybe I trade and I make $30. I want to put all that in and see if I can get, maybe be scalping, and then I end up losing all the money. So there are different strategies that you can employ. But like I always apply, like I always emphasize, look for one pair, look for a good strategy, then focus on that strategy. The strategy can give you a loss, You can make loss this week, which is 10. You can make another loss next week. You can also make loss again next week. You can make loss for like 4 to 5 times. But because it's a good strategy, you are going to bounce back. You are definitely going to bounce back. Those are drawdowns. It is going to happen. It is not a prophecy. It is going to. We are going to lose. So, but this strategy now that I'm going to what I'm trying to explain is that you have the edge because you now understand, okay, now I'm going to lose, but how do I avoid blowing up my account? That is why you have to understand this thing. Set your risk to reward ratio. It is very important. When you lose $1, you wait for the next setup. When the next setup comes, you lose again. Once you lose at least, not at least, once you lose at most $10 of your account, 10% of your account. That means if you are dealing with $100, once you lose 10% of your account, close that market and you are done for that week. If it happens on a Monday, you are done. Don't come on Tuesday and trade. I know what I'm saying. It is from experience. It is from experience I'm going to that I'm explaining these things to you. From experience, from painful experience. So I'm explaining this thing so you can understand how to start reaping your reward. Stop dashing, stop giving out, stop dashing these people your money. They have money already. So when you trade in the wrong and they keep making money off you. People say Forex is a scam. It's a scam because they have been able to they give us something, and because they know that we are going to use our emotions will come to play, and we will end up blowing up our account and we'll look for extra money again and want to try again. No, stop trading like that. Trade as a smart. This is a smart money technique. I'm going to teach. Now, I've explained something. I said something about this um, trading 10% risk to reward. You are also targeting a 10% goal. Let me quickly show you something, guys. Let me show you something. Let me show you my results. Let me show you my results quickly. 4 years. Let me quickly show you my results. Okay, so this is my result. Please look closely. Look closely. As you can see, January, January, week one, this 2022. January week one, we met our target. We're trading $100. We met our target of 10%, which is $10. Week two, we met target. Week three, we met target. Week four, we did not meet target. In fact, we had minus 23. I'm going to explain this when I'm talking about talking about the strategy. I'm going to explain what this figure is and how many pips or how many levels do you need to get to achieve this $10. I'm going to explain it using my currency, using the index and what the tool I'm working with. I'm going to explain everything to you. So you can see there was a good one, good. Then there was a bad. Then good. Then match, bad, fail. Yes. Then fail. Yes. Fail. Yes. I didn't get the target. The target is 50, but I didn't get the target. 50 is what will make us to make at least 10%, but I didn't get the target. So October 21. That was on Saturday. Then get this one was good, bad, minus 24. I could not. I didn't lose completely. Then good. So at the end of the year in 2022, we made a total of 1,424 points. What this means is in our account, it means that we have made a total of 2.85 profit percentage, meaning our account is going to go from $100 to 285. From $100 to 285 in a year. That's times 2, almost times 3 of my account, just using this simple strategy. Now in 2023, you can see from this result here, you can see. Let me explain. I think my sound went off, so let me just explain it again. So as you can see from my 2022 results, January, the first week was good, second week good, third week good. The fourth week, the target is 50 points, but we were only able to make minus 23. I set my target for 50 loss or profit, 50 loss or profit. So, and we were able to make 3 out of 4. February, we entered February and we started again. 1, 2, 3, 4.